Hi, thanks for checking out this video. In this video, I'm going to do a review of JMMB Group Limited. I'm going to go through the financial statements and analyst report. I'm going to look at the price action from the Jamaica Stock Exchange's website. And I'm going to talk about the company, talk about the results, share my thoughts on it, and then speak as to whether or not I think this company is overvalued or not. It should be a very interesting video. If this is something that you're interested in, seeing stock reviews like this, let me know in the comments below. Leave this video a like and let me know which stock you'd like me to review next. Before I go any further, please note that this is not financial advice. I'm not a licensed financial advisor. Therefore, anything that I say in this video is for educational and illustration purposes only. Before you make any financial decision, please speak to a licensed financial advisor. I have the annual report, the 2021 annual report up on the screen right now. So let's have a look. All right, so we're going to look at just a few pages from the annual report. We're going to look a bit at some of the highlights. We're going to look at the 10-year statistical review. I thought that was interesting. We're going to look at some key points from the management discussion and analysis. And then we're going to look briefly at the financial statements. Now, if this is your very first time, we've done reviews like this before. I'll put the links in the description. I'm not going to go through any of the explanations that I normally go through because I'm trying to get this review done in under 30 minutes. So the very first thing we're going to do is look at some of the highlights. So the first thing we see here is that, so JMMB is in 3 countries, right? It's in Jamaica, DR, and Trinidad. And what we're seeing here is just the makeup of the operation. So we'll get into a little bit of what JMMB does, but if you're not sure, it's a financial services entity. So they have a bank, they have a brokerage firm, they perform some other services. I'll get into that a little bit more when we go through the company overview. But they are in 3 countries, as you can see here, and what you're seeing is the growth per country. Yeah, that's what that's showing. Next, we have the total assets. So we see a 29% growth from 2020 to 2021 in assets, and we'll see that a little bit further on the balance sheet. The net profit has grown by 9%. Now, considering it's a pandemic, I mean, that's actually, considered reasonable for an industry that has seen quite a significant decrease in revenue due to the pandemic. Total funds under management is up 26%. And all this means is just pretty much all of the funds that JMMB is managing under its overall portfolio. And the net interest income has seen a 13% growth. And we're seeing these same highlights here, so I don't need to go through them again. Next page, we have the business segment, and it's showing you the different segments and its contribution to profit. So 3 key segments you have here. You have financial and related services, and that's it. That's the securities, stock brokering, portfolio planning, funds management, advisor services. Then we have the banking and related services. So, customer deposits, loans, credit facilities, FX, trading, and remittances. Then we have the other, that's insurance brokering, investment and real and estate holdings. And we see the split there. So a lion's share, 68% of their contribution to profit came from their what I would consider, I guess, would that be their core business? I don't know, but it's coming from the financial and related service, right? We've seen that their customer base has grown by 9%, so they have a total of 386 customers in their client base right now. We see that their last attempt to raise funds was oversubscribed by 66%. And, that's that thing that that would have occurred sometime last year. And this is just an overview of the company as at the end of the financial year, March 31st, 2021. And we would have gone through these already, all right? So these are just some areas that I'm going to go through. Now, something that I want to share with you, just in case you're not familiar. Now, JMMB has a 22% stake in Sagicor Financial Company. So it's listed here under their company overview. It actually splits across 2 pages. So you see that there. Let me go down some more. So we're gonna go, these are just highlights of the report. We're gonna get into that a little bit more. But the key thing to note here, they're going through, they would have seen the impact of the pandemic. And I think we wanna skip through that right now. So I'm clicking through the pages because I want you to be able to see that all the information I'm talking about and looking at is information that you have access to as well. All right, so we're gonna look at, so we saw where its total assets would have grown. That's what we're seeing here. So last financial year, they ended at 399 billion. They ended this year at 513 billion, right? So that's great. That's a greater growth in assets. We see in investment securities has grown. We see investment in associate. Now this is Sagicor Financial, which I would have mentioned before. Notes, receivables have gone up. Interest earning assets, repurchase agreements, customer deposits. Now, customer deposits would be considered actually a liability because it's not their money, it's their customers' money. Stockholders' equity has gone up. Funds under management, as you would have seen before, has gone up as well. And what they've done here, this is actually a 10-year review. So if you go through to the next page, it shows you all the way from, let me zoom out. It goes all the way from 2012 all the way up, right? So we're just gonna look at the last few years because that's what we have interest in right now. So if you look from, let's say, 2018, they have seen steady growth in total assets, with the last year being the largest jump. If you look at investment securities, that has been going up as well. If you look at funds under management, that has almost doubled in 3 years. Let's look at now profits. They've gone from 15, 18, 21, now 22. Now, the thing that I noted here was definitely the pandemic had an impact here because they were growing maybe, they were growing at a faster rate up until the pandemic. And naturally, you're going to see this within the financial sector. So that's not uncommon. And the net profit would have just gone up slightly. I think that's about 9%, as we would have seen before. And again, that's due to the pandemic. Earnings per stock from 2018 till now, dividends per stock. We would have seen in the previous year, they would have paid more dividends, but based on, again, COVID, there was an adjustment there. I believe there's actually a dividend announcement right now. So that would have been decided as at the 29th of July. So I believe we should be able to check that on the stock exchange website. The price to earnings ratio has actually, it's actually gotten lower from where it was 3 years ago. That means, it's at a very, very nice spot right now. We'll get into that some more later. And their efficiency ratio is actually trending nicely as well. And this is some other information. So their market cap would have gone from 42 billion in 2018 to 52 to 74, now back to 64. All right, and the market price. So 3 years ago, if you had JMMB in your portfolio till now, I think at the point of recording this video, it's at about $38, right? So you'd have seen that would be 12, let's say what, about 50%, almost 50% increase in 3 years. That's not bad. And this would be just the going back all the way to 2012. We're not going to do that. But if you wanted to, you can have a look there. So let's go through the rest of this here. And it makes for quite an interesting read. So if you are interested in this company, I'd recommend that you give it a read. All right. All right, so this is where we wanted to go to. So what they're doing is speaking to their performance, right? So they are looking to diversify regionally. We see that there. And what they're saying is, I believe that the report said their operations would have doubled in profit. Now Trinidad is still not doing as well as they would have hoped, but DR is doing well. And I believe that is what we're seeing, yes. So the performance of our entities in DR improved as total operating revenue grew by 43%. And we also saw a contribution to the group operating profit improved from 7% in the previous year to 14%. Yeah, so that's what I was saying. It doubled. Growth in gains on securities trading, net interest income and fees from managed funds drove much of this performance, right? So what they're doing here is just commenting on the same performance we would have seen the highlights for, right? So the business line performance here. So year over year, moving to 30% from 26% the previous year, contributing to the line's overall growth. Our loans and notes receivable, which grew by 21%, right? This overall growth has once positioned us as the fastest growing bank in 2 of our operating territories, Jamaica and DR. Now that's important to note, right? If they're considered one of the fastest growing banks in Jamaica and DR, then that bodes well for them as a stock. All right, so their loan portfolio grew 37%, while the rest of the market would have grown 13%. That's pretty good. And we saw where they would have grown their customer base by 9%. And this, what we saw before, were the business segments which contribute to profit. We're not going to go over that right now. Let me see what other section is worth noting. All right, I'm just going through. So they would have made some innovation here in terms of how to open an account, right? So they've made it simpler to open a bank account, right? That's what this is saying. And this is actually a good thing, because if you can open accounts faster, that means you can acquire customers faster, which means, you know, more potential business. So that's good news. And I believe this would have been a post on Twitter about that fact. All right. So this would be from their fundraising. I'm just going to scroll through here. There was a money line upgrade as well. What I saw in terms of, you know, social media, persons were very excited about the upgrade. There are persons who actually, you know, swear by JMMB's money line. You know, I can think of a few, and I know for a fact that JMMB does very well in terms of social media, marketing, that kind of stuff. So this bodes well for them as well. All right, I'm gonna scroll through all of these, and I'm gonna go to the financial statements, because I believe we see this information there as well. But if you want the details as to everything that would have been relating to the financial performance, this is where you would look. All right. So if you're interested, I like to actually look at the outlook. in terms of what the company has to say about its own outlook for the coming period. So they're anticipating that the Jamaica economy is going to rebound in the coming year with a growth of 2.3%. That is expected to be underpinned by the global vaccination program. Now, what we know, especially in Jamaica, which is one of their largest contributions to profit, vaccinations have been slow. Now, what does that mean? It means potentially the growth that they would be projecting and expecting in Jamaica may not come on stream as fast as they would like. Also, with persons being unemployed, with tourism being down, with the overall economy being impacted, that could also have an impact as to when things may return to normal for JMMB. All right, so as global economies return to normalcy, we expect the tourism sector to remain open, resulting in a reduction of local unemployment and improved economic activity. That's pretty much what I was saying before. Further, as the government of Jamaica's vaccination program continues, we anticipate the continued reversal of restrictions, which should in turn further stimulate domestic economic activity. That's very important to note. All right, and then speaking about their DR operations, and then Trinidad. All right, so I'm going to go straight to the financial statements. All right. I really like how this report looks, by the way. All right, here we go. Okay. Yes, ensure that I'm on the right page. All right. So we're looking at the profit and loss account. So I've seen net interest income would have increased from 2020 till now. Fee and interest income slightly down based on the pandemic, most likely. Gains on securities have actually increased. Net gain loss from financial assets at fair value, that's positive as opposed to negative in the previous period. And fees from managing funds on clients' behalf has remained the same, and foreign exchange margins are actually down. Staff costs look actually lower, other expenses are roughly the same. Profit before taxation would have been up from the previous period, and profit for the year, which we would have spoken about before, would be up about 9%. And the EPS was $3.99 last year, it's $3.84 this year. This is the profit and loss. This is what we're just looking at there. All right, let's look at their assets. All right, so we have cash and cash equivalents going up by almost 50%. That's pretty good. Well, more than 50%. That would be 21, that would be 63, more than 50%. Interest receivable is up. Income tax recoverable is up. Loans and notes receivables up. Other receivables down. So of course, what we see here is a significant increase in assets. What we would have seen before, their largest growth in asset to date. And investment securities would have gone up the largest, I believe, and as well as the cash and cash equivalents. And if you want to see the details of these, you can check the notes within the financial statements. They're here. What you do is just scroll down and look for this number, and it would tell you the details of that. All right, shareholders' equity is pretty much the same. Retained earnings, there was a revaluation that was negative, now it's positive. Translation reserve is up. Retained earnings is up for 7 billion. Let's look at liabilities. Liabilities have gone up now. Customer deposits, remember I mentioned this before, it is considered a liability to a bank. Securities sold under agreements to repurchase. As I said, check note 26 and you'll see those details. All right, so redeemable preference shares would have grown in terms of liabilities. Securities sold to repurchase, customer deposits, those are the main items in terms of growth of liabilities, and total liabilities has grown from 358 billion to 452. All right, I believe those are the highlights that I wanted to cover. This is a statement of cash flows, I believe. Let's look at this and see what this has to say as well. So what we're doing right now is just really looking at how this year compared to last. Now we know that this is a pandemic year, so we're really bearing that in mind as we're going through this. And what my thoughts are, at least, and this is not financial advice, let me just say that, is that you're going to see kind of marginal growth from the financial sector while the economy recovers from COVID. So once we're past the worst in terms of, vaccinations are done, persons are going back to work, things are returning to normal, then we will see, greater, maybe double-digit growth from banks again. So I think that's what we're seeing here. All right. I'm trying to look for anything that sticks out to me. And impairment loss, note 8 here would have been greater than the previous year. Unrealized loss on trading securities. I mean, what I would probably just look at here is the net cash position is greater than it was last year. It's 3 times what it was last year. Net cash from investing activities. So they would have made more investments. We saw here investment in securities and cash equivalents. We saw that would have increased from our previous slide. All right. All right, so I'm gonna pause here and go to, let's look at where the price has been since the start there. Okay, so I'm over Jamaica Stock Exchange's website. I'm just gonna zoom in here. All right, so let's look at how JMMB has been doing since the start of the year. They started the year at $33, and it was relatively within that range for 6 months. And as of July 14th, it started to move up. So it went from $33.81 on June 15th to $37.14 on June 16th, and it actually went as high as $39, and we're seeing it within that range since then. So, I mean, you would have been waiting 6 months if you're holding this company to see any growth. Persons who would have purchased from the APO would have probably been waiting for this. But if you took advantage at January, you'd be up about 15% right now at current prices. And it would have, in the last 52 weeks, it's been as high as $40. And year to date, it's up 7.31%. All right. In terms of articles and news, this is what I was saying before. There's consideration for dividend that would have been from July 29th. So that's likely would have been announced by now, as in the amount. So we should see that somewhere. Let me see what I had here. So when I was researching this, I noted that in the last 5 years, I went all the way back to 2016. The peak for this stock price was $55, and I believe that was sometime in 2019. So the reason why I looked into this is because I wanted to see how well this company did before COVID. So if you remember, JMMB was one of those companies that started to pick up momentum. I'm just trying to find it. Sorry for all of this scrolling. So let's see. Yeah, here we go. So around this range here, about July 2019, it was in the 50s, right? And that's, you can imagine, sentiment was high, business was going good. So what my guess is that after the pandemic is gone, this company could potentially get back to these price levels once there's sign of recovery. So let me see as well. So I wanted to share this report as well from MARITA. So MARITA did their analysis of the financials that we were just looking at. So I wanted to just share some key things from this. I'm going to place the link for this below, right? This is directly from MARITA's website. So what MARITA has done based on their analysis of JMMB, right? They believe that JMMB's fair value in this case is $47, right? It's currently, at the point that did this report, it was trading at $37. They believe fair value is 47, and this is based on two calculations that they did, and I'll show you that shortly. But I did mention that we'll get into what JMMB does, right? So it says here it provides a range of financial solutions for individual, business, corporate, and institutional clients in Jamaica, Trinidad and Tobago, and Dominican Republic. The company operates in 3 segments: financial and related services, banking and related services, and other. So that's their core business. It's financial and related services. Segments offers securities brokering, stock brokering, portfolio planning. I believe we saw that in the annual report already. And they were founded in 1992. So what MARITA is sharing here is their insight into the performance of the company. So I'm actually going to go straight to here, right? Because I'm trying to get this review done in under 30 minutes. So what they're saying is that going forward, they expect further robust growth from the group, driven in large part by its non-interest income, which was flat in 2021 and should improve amidst a strengthening economic backdrop. Similarly to what JMMB said in their annual report, as the economy improves, JMMB is expected to improve. Further, despite the significant share of profit reported, Sagicor Financial Company's performance was constrained by losses in the first half of the period, indicating the share of profits should increase further as the pandemic recedes. So what they're commenting about here is the impact of Sagicor Financial on JMMB's profits, since JMMB owes 22% of Sagicor Financial. All right, and it's speaking to about interest income there. All right, so they're saying that increased competition puts further pressure on net interest income when coupled with already low interest rate environment. So they're just speaking about the climate in terms of the industry. All right, but what they're saying is that they have a positive outlook on the group, and that's why they say it's overweight for them. And overweight for them means that they think that the exposure to this asset should be between 5 to 10% of your overall portfolio. That's MARITA, not me. All right, and they're sharing their subsidiaries, the associate company and ownership. I mentioned that before. Speaking a little bit about Sagicor Financial Company and JMMB stake. All right. And now it's speaking about revenues and expenses for the last 5 years. So you'd have seen these numbers pretty much. So this is total revenue that has been growing steadily. Total expenses and total benefits, net income as well. over the last 5 years. So I want to go straight to the valuation now. All right, let's pause here for the business strategy, right? So JMMB's core strategy broadly entails the following elements: new growth, new and enhanced business line. So this is good to know. This is showing you how the company intends to grow its business. So they're gonna come out with new private equity funds and new investment management solutions. So they're gonna add to their existing portfolio of services. Financial inclusion, they're going to try to deepen its market penetration for their TT operations, and they're trying to grow in existing business lines, right? So this is involved in scaling of startups. So they look to acquire existing companies and then just scale them. That's what they're saying right here. And let us look at the valuation now. Okay, yeah, let me actually pause again. So it's saying here the profitability decline of the industry over the period is highly consistent with the underlying economics of all the financial services companies. Essentially, the services provided by banking and financial institutions are linked to the strength of the economy. This is very important to note for all financial companies in your portfolio. So due to the recent decline, it affects the areas of banking, tightened credit spreads, reduced net interest income, reduced market activity. That's actually important to note, which means fees and commissions would be lower. With that said, the cyclical nature of these companies has played a significant role in the industry's fairly weak performance throughout the pandemic, right? Because as we saw, about 9% increase in net profit. But at this juncture, however, it is important to note that the industry is stable. That's a very key thing to note, and not at risk of any systematic failures, which has been acknowledged by the Bank of Jamaica. So against that backdrop, should rebound once the economy picks up. I've said that before already. And these are just the highlights of the financial statements that we looked at before. So I want to get to the calculation of the valuation. And as I said, I'm going to link to this statement. So if you want to check it out, you can. All right. So valuation summary. That's what this video is about, right? Determining whether or not JMMB is undervalued. Now, according to MARITA, they are. What they're saying is that they did two valuation methods. They use the dividend discount model and the price to earnings. So when they did the dividend discount model, they got a fair value of $39.98. When they did the PE ratio, because JMMB has one of the lowest PEs for the financial industry, it was 10.74. So they got an intrinsic value of $54.15. When they average both, then they get a value of $47.07. So based on that, and based on the current price, they're saying that this represents an upside of 24.92%. So according to MARITA, JMMB is undervalued. As we see, though, there is the impact to the financial sector. We're not going to see really any impressive reporting until the economy picks up. And what we should bear in mind is that that's going to be contingent on how the vaccinations go, how COVID-19 spreads in terms of whether or not there are cases that are increasing, whether or not persons are going back to work. So you want to look at those things if you're holding any companies that are from the financial industry in your portfolio, because they're likely to be going through the same things, right? So that's it for this video. Hopefully you found this helpful. I tried to do this in 30 minutes. We're at 34 minutes runtime now. Bear in mind, anything that you see in this video is not a recommendation to buy JMMB. I am not a licensed financial advisor. Please speak to one before making any financial decisions. This was for educational purposes only. Thank you for watching. If you found value in this video, please give it a like and look out for the next one.